Welcome to this edition of Insider Secrets, the weekly podcast that turns real estate investing goals into reality. Each show, we interview guests who are seasoned real estate professionals, actively closing and managing real estate deals. Mike is the founder of My Core Intentions and would like to help you make your real estate investing dreams a reality. Mike coaches you to buy investment real estate, creating short-term cash flow and long-term wealth. Your host and real estate coach, Mike Morawski, has more than 30 years of real estate investing and property management experience. Here's your host, Mike.
Hey, what's up, everybody? Good morning. I am so excited about today's show. And as I normally say, buckle up because you're going to enjoy this ride, that's for sure. This is going to be very educational and bring you some information this morning that you might not know, or maybe you know and just don't know a lot about, or how to access this investment opportunity. But before I bring my guest in, let's talk about intentions. Let's talk about intentionality. What have you designed for yourself? What are your intentions for the weekend? You know, we all have dreams, we all have goals, right? They're all things that we want to accomplish in our life. But if we don't set intentions around them in order to get there, if you don't have good accountability set up in your life to achieve the milestones to help you achieve your goals, we kind of end up falling flat or falling short. So I just want to encourage you to sit down, take some time, think about some intentions. But right now, I want you to grab your coffee and I want you to sit back. If you know somebody who needs to hear about self-directed IRAs and using those to invest into real estate syndications, you might want to give them a call or text them real quick. If you're new to the show, glad that you're here today. Like us, love us on social media. If you're on YouTube, please smash the subscribe button. We love the followers, and we're always trying to bring good, relevant content to you on a daily basis. So the information we try to provide is at a high level where you can actually take it and go take some action with it. So I'm excited this morning. I get to introduce a longtime friend of mine, Kaaren Hall. Kaaren is with uDirect in California. They are a self-directed IRA custodian, facilitator. I think I said that wrong. They're not a custodian. But we'll let Kaaren explain that a little bit more. I knew Kaaren way back when she first started her company. And just to watch her grow this company over the last number of years, and I'm not going to date either one of us right now, but it's been a while. Let me bring her in real quick, though. Hey, how are you?
Great. Cheers.
I hope everybody's got their coffee this morning. Hey, thanks for being here. I appreciate it.
Yeah, thank you. I really appreciate it. So yeah, I'm sorry, but it's been 15 years.
It's good to see you, though. I always like connecting with you. And I actually think the last time you and I got together was here in Chicago. We went to Tofano's and had dinner that little Italian place that is my favorite place in the world.
Yeah, we made that video promoting your event. That was fun.
Oh, that's right. That's right. Yeah. We did. Hey, so listen, let's get started. I always ask my guests in one word, what best describes you personally and professionally?
Wow. I think responsible, I think is the word. You know, oldest sister and a CEO and mom, a lot of responsibility. So I think responsible would be a good word, both personally and professionally.
You know, my next question would have been, what makes you responsible? But you just said it. Oldest sister, right? We're the responsible ones all the time, that's for sure.
To take care of, and that's what I love to do. So
awesome. Well, good. Hey, so let's talk a little bit about your history and how you started uDirect and what you guys do.
Yeah, so I've had a varied background, and it's not what most people would think. I mean, I started off my professional career as a radio announcer, and I did that for 17 years in between doing other things like property management. I got a real estate license. I've had real estate licenses in 3 states. I don't know if you know that. In Washington, Texas, and California. But, you know, for a year, I was like a professional realtor along with radio. I did that together, and then some property management. And then I got into mortgage loan servicing and did that for a number of years in Dallas, for example, and also here in Orange County, and then got into loan origination. And so I stayed in loan origination, and this is spanning a lot of years. But I was in loan origination right at the time of the Great Recession. So I got out and needed a job. And I said to a friend of mine named Aggie, I said, hey, Aggie, I need a job. and she knows everyone. So she hooked me up with somebody who owned a self-directed IRA company. They're opening a new office in Orange County. And long story short, they hired me and it was great. So I opened their office and was opening 50 accounts a month and they fired me. Oh man.
For overproduction, I'm sure.
Yeah. So you got to have faith, right? So I made it through and founded uDirect IRA services. And that was 2009.
So first of all, I just want to mention you and I originally met through a mutual friend, Kathleen, who I love to death, great lady. And we connected way back when I used to come to California and speak at Kathleen's events.
Yeah, about due diligence.
Yeah. And you and I both would speak. I'll never forget that one event we did, like just before the world went to hell in a handbasket, where you spoke, I spoke. I can't remember the woman's name in the gas and oil business.
Kathy.
Yeah, I was going to say Kathy, but I wasn't 100%. So she had a ton of people there. And then before we knew it, the world was over, at least for some of us.
Oh.
That's right. That's right. And if the world crashed, you pick up your pieces and you move on. That's my message to people is you can't let your past define your future and just move on. All right. So let's talk about uDirect and what does uDirect do?
Well, you mentioned we're not a custodian, we are an administrator. So when I founded uDirect IRA services, I went around looking for banks and trust companies, like somebody to hold the money and do the cash management for the clients, because you have to be bonded and insured. And there's a whole long drawn out process to become a trust company. And so I interviewed many banks and trust companies, and I came to an agreement with one of them. And we've had this relationship now for about 14, 15 years. And that's how I got started with that, and opening one account at a time. It was just literally one IRA at a time. And now we have like about $1 billion, just under $1 billion under management.
Wow. Say that number again.
$1 billion.
How's that make you feel? Like responsible, right?
Yeah. I mean, it's a big number, but thanks to computers, we can keep track of everything. And we've just worked with a trust company on a kind of a data migration to a better system. And so it's always improving.
Awesome. So let's explain to people what a self-directed IRA is and how they can use it.
Yeah. It's like the best kept secret is what it is. It's something that you've been able to do, right? And I'm sure you tell your people about that. Ever since 1975, you've been able to self-direct your IRA, but nobody knows that, right? Because that's when IRAs were created. And when they were created, you could always invest in anything except life insurance contracts and collectibles. So that's when it started. And then a couple of companies really got into it, and some of the early adapters into creating self-directed IRA companies, because you can invest in stocks, bonds, and mutual funds over here, but to invest in alternative assets, you need a different kind of account, because people who are licensed to sell you stocks, bonds, and mutual funds can't necessarily help you with alternative assets. So the self-directed space is all about alternative assets, private equity, which you're so familiar with, and which is a path to getting into assets like multifamily. And also like performing and not performing debt. You can get into precious metals. That's huge right now. A lot of people are loving precious metals. Even crypto, if you want, all different kinds of a regular house. You have a renter move in, they pay your IRA the rent. Lots of different kinds of alternative assets not correlated to the stock market.
Yeah. So I know there's some rules, and I just want to back up because I want to be clear with people about what alternative investments are, right? It's real estate, gas and oil, precious metals like gold, silver. You can invest in crypto, right?
Yeah. Yeah.
But you can't collect art and you can't collect cars.
No collectibles. Yeah.
Right, which is interesting. You would think you'd be able to maybe do cars, but I guess they think that maybe the value's not going to always be there.
Right. And it's also something you can have personal use of, because there are prohibited transactions with IRA. So you can't have any personal use of the asset. So if your IRA purchases a car, well, who's going to drive it from where it is to where it needs to be? If you drove it, that would technically be having personal use. It's just complicated. So it's on the collectible list.
So talk about personal use for a minute. So I can't go buy a house that I'm going to live in.
Correct.
With my IRA, right?
Yeah, you want to keep it arm's length. And that's the thing, is at arm's length. That's one of the first tests of whether or not you can make an investment.
But I can do a flip through my IRA, or I could buy an apartment complex through my IRA, or a piece of, right?
Correct. Like a rental property, sure, but you're never going to live there. You also don't swing the hammers or do any of the work yourself because that's called an over contribution of sweat equity. Yeah. So you can hire third party vendors. And if, say, you have a rental property, say your IRA owns like straight up, not through a private equity deal, but straight up a multifamily, you can screen the tenants, you can collect the rent checks, you can hire third party vendors. But what you're not going to do is live there or do any of the work. So you keep it arm's length.
Yeah. So how about this just occurred to me. Do you find a lot of people who are doing like short-term rentals like Airbnb and that using their IRA today for that model?
There are some, I mean, the answer is yes, and short term or even long term, like 30-day rentals in an IRA. And so is it passive or active income? If it's active income, it can throw off a tax. We're dealing with the IRS here, so it's not always simple, but yes, people do that. Or maybe my IRA, for example, would lend money to you so you could invest in ADU or short-term rental, Airbnb.
I always say the IRS should be, I don't know.
Yeah. Or
Hey,
it depends. That's what they say.
yeah, right. It depends. Let me
Yeah.
look through this tax code. So let's talk about the different types of IRAs because I know there's a traditional, there's a Roth. Talk about the different types of IRAs, solos, 401s, all that.
Yeah, we call it a self-directed IRA, but it's sort of like an umbrella term for a lot of different kinds of accounts. Like you mentioned, traditional Roth, SEP, which is simplified employee pension, a simple IRA, which is savings incentive match plan for employees. There is, again, like you mentioned, a solo 401k, a 401k for somebody who's an entrepreneur who has no full-time employees in any of the companies that they own. If that's you, you can have a solo K, or even an HSA, health savings account, can be self-directed. But there's something new, and I'm glad you asked me about this so I could bring it up.
Oh, good.
There's something called the Secure Act 2.0 that passed at the end of 2022. And the Secure Act, what came with it is two variations on the theme of existing IRA. So a SEP IRA, again, it's for a self-employed person. It stands for Simplified Employee Pension, where instead of the contributions going in pre-tax, like a traditional IRA similarly, now your SEP, you can contribute to it as a Roth contribution. What? It's very surprising. Now, we're mid-year and the IRS is still not giving us the guidance on what the rules are for the Roths and what it includes or excludes or limits or anything. We don't have Treasury or IRS guidance. In fact, I was just at a conference last week in DC and we're literally talking to the IRS, literally talking to the Department of Treasury. They just don't have any guidance for us yet. But there's also going to be, the simple IRA is also going to have this ability where if you have a simple IRA plan, you can make contributions as after tax, like Roth type of contributions where the money can grow tax-free for life. We're just waiting on Department of Treasury guidance.
Yeah. So why a Roth IRA? I think this is amazing. People need to understand this, but why do I want a Roth versus a SEP or versus a traditional?
Well, every type of IRA has its own rules. A traditional IRA is actually the most common, by far, of all the retirement accounts. Most retirement accounts, IRAs, are traditional IRAs because a Roth has income limits. So if you make too much, you can't even contribute to a Roth. Right now, you can convert regardless of income into a Roth. But the cool thing about the Roth is when you have this money in there that you've contributed, you can go invest it and it can grow like unlimited growth, in that whatever the growth you see in that account is tax-free for life, as long as you meet a couple of qualifying conditions like turning 59 and a half and having a Roth of some sort for 5 years, for at least 5 years. So you meet these qualifying conditions, the money comes out when you're 59 and a half, tax-free. That is great because I think you and I both know when we're ready to retire, that taxes are probably going to be a little bit higher than they are now. Probably. Yeah. Pay off that debt. And whatever it is, it's nice to have money that is tax-free, especially in retirement when you're not working a job.
So as a syndicator, when somebody comes to me and they want to invest in one of my apartment syndications, and just for people listening that don't understand that, syndication is just a fancy word for saying, hey, you're going to partner with me. I'm going to invest alongside you. you're going to invest alongside me and we're going to share in the profits. That's all it means. But there's bigger bonuses, I think, that a lot of times people miss in that model, because it's not just this, right? But when I talk to somebody about tax free, that means any money that they make from the distributions along the way, plus the promote on the back end when we sell the property, and that money goes back into their IRA, they don't pay tax on that, do they?
No, no.
Ever?
Well, if it's a traditional, it'll be tax deferred until you take it out, until you take personal possession. And again, with a Roth, as long as you meet those qualifying conditions, then it's never taxable. Never, never. Except, I mean, there are a couple of, it's income taxable.
Which means income taxable. What does that mean?
That means you're not going to put the income on your 1040, but there are two like twin taxes or cousin taxes for IRAs. And one is called UBIT, unrelated business income tax. Like if you've got that Airbnb and it's an active business, that could put off UBIT tax. Or if your IRA invests in an asset that has leverage, that can throw off another tax called UDFI, unrelated debt financed income tax. And if your IRA owes either of those two taxes, your IRA files a 990T every year, and your IRA pays any tax that might be due. But a lot of times you can take deductions, and so you may not end up owing any tax. There are ways to kind of write off some of the expenses. So that is a conversation to have with your tax person, and they will help you with that.
So let's qualify this for people right now too, because my attorney always tells me I need to qualify things and say, hey, I'm not an attorney and I'm not an accountant. Go talk to your professional for the details. We're just going to give you a global view, right?
Exactly right. Yeah.
Whenever I'm out telling my story or talking about multifamily, I always show that slide, that disclaimer that says, hey, go talk to your professional. So can't you also do like medical savings plans and 529s or college savings of some sort?
Sure, sure. So there's the HSA, the health savings account. So if where you work, you have what's called a high deductible health plan, an HDHP, then it's high deductible and less coverage. And so you have a little savings account that goes along with that HDHP where you're saving that money. You can put money into your HSA health savings account. And actually, it acts like a Roth. You put the money in there, and except you get all the benefits. You get all the benefits. You get the write-off, it grows tax-free. And if you use that money for medical purposes, it comes out tax-free. Now, you can use that for investing, but you need to make sure you work it correctly. So that can be self-directed. Now, the 529 plan isn't self-directable, and that's because it's a state-based plan. It's not a federal plan. And so 529s aren't self-directable, but the ESA, Education Savings Account, can be self-directable. We used to offer them, but we don't anymore because the contribution annual limit per child is only $2,000 a year. They're just small accounts.
Yeah. Here's the other thing too that I really want people to get a handle on, because I meet so many people along the way that say, I don't have any type of retirement. And I'll ask them, I say, well, where have you worked in the past?
Right.
Did you have some type of a 401k or something set up from that employer? And you'd be surprised at the people that all of a sudden can find money, right? They go, oh yeah, I have this from years ago. I forgot all about it, or I get this statement. And those are the perfect people to be able to do these rollovers, right?
That's so true. Yeah. If you have an old plan, that is exactly the thing you want to do. You want it to work for you.
Yeah.
And right now, what we find here, I mean, like I was telling you, we've had a record year. Every month is broken records for the best month ever. And that's because people are looking for alternative assets outside of the market, tangible assets they can touch, assets that are outside of the control of Wall Street. It's becoming very, very popular. So you can take those dollars in those stale, 401k previous employer plans, could be a 457, could be a 403b, and roll it over and do a self-directed plan and invest outside of Wall Street.
Now, the restriction around that, though, is if I'm still employed at an employer and have a 401 there, I can't do that with that entity, correct?
Probably not. If it's a 401k, you can go ask the plan administrator, whoever it may be, if the plan agreement, it's a contract, if the plan agreement says that an in-service transfer is allowable. And if it is, then you can transfer while you're still in service. So that is a possibility.
Oh, that's interesting. I don't know that I ever knew that. That might be a road to take a little bit. Hey, I have to ask about the crypto world right now and what your experience as an administrator is with people who've invested in crypto, or what about ATM machines? Any of that?
Sure. Yes. People invest in every single alternative asset, you bet. I think obviously crypto and cash machines are different today,
Yeah,
unless we go in central bank digital currency. But that's another conversation. But with
that's another
crypto,
podcast.
another podcast, yeah. With crypto, though, everybody wants to get in, be an early adapter because you've seen things start and then just go nuts. And I could see definitely the blockchain technology. Yeah, I'm all about the technology. But I think with crypto, it's the Wild West. There was another self-directed IRA company where their particular storehouse of crypto was hacked, and it was a big hack. And if you just type in crypto hack, you could read a dozen stories about how hackers have stolen cryptocurrency. And it's just the Wild West. So it is a high risk asset, but everybody has their, I guess, temperature for what they're going to invest in. But you can, that's the thing. It's not like I don't recommend or promote any particular investment. The fact is, you can invest in it. And no investment is without risk, right?
Yeah, right, exactly. And have you had some clients that are crying in their Cheerios because of their crypto losses?
Sure. But when you're investing IRA dollars, a lot of times it's not the same dollars that you would use to, make your house payment or put food on the table. Those are a lot of times your set aside dollars. Now you need to save for retirement. That's pretty darn important. But a lot of times it's not going to break the bank for a lot of people. But you just have to understand the risk with any asset. And like you mentioned, Mike, when we first met, we were talking at that event about due diligence
Yeah.
and doing your homework. And so I've helped a lot of people over the years with due diligence and crime fighting and fraud awareness. And in fact, you introduced me to your friend James, and he spoke at our RETA group, the Retirement Industry Trust Association, about how do you look at a deal? How do you know if there's fraud in a deal? And this is, again, another podcast for sure.
Yeah, that's the fraud guy. Yeah.
Yeah, yeah. Oh, he was a big hit.
Yeah. So good for him. How about depreciation? Can you talk to that a little bit? Are you allowed in your self-directed to take a depreciation?
Yeah, I mean, not really, because if you think of it, depreciation from what? Your IRA isn't paying tax. So there's nothing to depreciate because there's no tax. And when you take it out, it's tax like income. The only time depreciation falls into the retirement account world is when there is UBIT or UDFI tax. And that kind of depreciation can offset any UBIT or UDFI.
So most people that invest in a multifamily syndication, they're not going to have UBIT, are they?
They might, not UBIT as much as UDFI. So say, for example, you're raising capital, you've got a Reg D offering and you're raising capital, but you're not just taking equity investors. Like a lot of times an IRA will be an equity investor. You could be a debt or equity investor. But say you've got some like IRAs, I know you're capital stacking. And so maybe one of those stacks of capital is leverage. And so if that's the case, the K1 will describe that UDFI has passed through to the IRA, and the IRA will need to file a 990T, even if no tax is owed, just to file and say zero. But a private equity deal can throw off UDFI tax to the IRA.
And what happens in a deal that causes that to happen? So I'm a syndicator. I want to watch out for that and help my IRA people maximize the most. And let me just explain this real quick. So we know a typical syndication deal is like a 70-30. And investors get the lion's portion, right? They get the 70% side. But within that 70% side, what we just decided to do was we created a two-tier investment strategy where if somebody has qualified funds, they're on one tier where they can't participate in the depreciation. But the other tier is people that can participate in the depreciation so that the depreciation doesn't get wasted on somebody who can't use it. So what would cause somebody, and what should I watch out for as a syndicator that we maybe could do differently to not have somebody have that tax consequence to deal with?
Well, I'm just going to give you the answer that's in my head. So that here it is, that if somebody invests in a private equity deal as a debt partner, so their IRA is lending money to the syndication, to the deal, there's not going to be any UBIT or UDFI tax. It's a loan. The money is lent and there's some sort of agreement and the money's going to come back to the account holder, right? Back to the account. The other way to prevent any of the UBIT, UDFI taxes, just not exactly answering your question, but the other way is for you as an asset sponsor or any asset sponsor to take on no debt. And everybody's an equity investor and there is no debt at all. So either the IRA owner takes their account and invests that IRA as a debt partner, great, no UDFI, no UBIT tax, UDFI tax, or the asset sponsor doesn't take on any leverage at all and all the IRA holders are equity shareholders, the IRAs are equity shareholders, no tax. Does that make sense?
Yeah, absolutely. Interesting. So a smart move, well, probably tougher, but if you're doing a $30 million deal and you would maybe have to raise 12 million, on the equity side, you just raise the 30 million and do the whole deal cash.
Yeah, it's just leverage. It's just with IRAs and leverage, that's the oil and water.
Well, that's why in the multifamily business, we like leverage because it causes the return to be better.
Yes, I mean, everyone likes leverage. It just is a fuss for an IRA holder.
Yeah. So any other new guidelines or rules that are exciting for people that have happened or are going to happen that you know of?
I think one of the most dramatic things is the increase of the RMD age, required minimum distribution age. And so you can hit an age where you have to take the money out of your pre-tax accounts, like your traditional, currently your SEPs or Simples or your 401k pre-tax contributions. So it used to be 70 and a half. And then in 2019, we had Secure Act 1.0, and that raised the RMD age from 70 and a half to 72. Yay. So that meant that you'd have even longer for those retirement savings to percolate and grow and compound before you had to take out some of the money. But with Secure Act 2.0, effective 2023, that age is now 73. So it gives you like an extra year. So instead, it's gone from 70 to 70 and a half to 72 to 73 now. And in 10 years, in the year 2033, that age will be, let me just think about it, 75, which is great because say, for example, you're retired and you're 73 years old and you think, I have other streams of income. I don't need to touch this IRA money right now. But if I have an RMD, I have to right now. But say it's later on, say it's like 2026 or 2036. In 2036, you can wait till you're 75. That's great. So those dollars in your retirement account can be growing and growing and growing and accumulating tax-free or tax-deferred. So it's great if you don't have to take the money out. The later the better, I think, for the account holder.
Is there a special accountant that I should go to when I have a self-directed IRA, or can I just go to your general H&R Block or whatever on the street corner?
IRAs are pretty common. I think even an H&R Block could handle an IRA. They don't really care so much what asset is in there. The trick gets in if they need to file a 990T and you need to tell them. When it's self-directed, you take on more responsibility, like the responsibility to know that you need to file a 1099. This is why when people open an account with us, we have a consultation with them. We offer a free consultation to anyone. You'll see it at the top of our website, free consultation, because we want to talk to you, understand your deal, who are the parties, do you see any prohibited transactions or any kind of things that you might not think about that we could bring to your attention before you get into it.
Yeah, that's awesome. Anything else that you want people to really be aware of?
Just save money, contribute, because a lot of times when you contribute, you may be eligible for a tax deduction, so you're paying yourself and not the IRS. But we are just, as a country, severely unprepared to retire. And I've heard this statistic, I say it, but I've heard other people too. If you have $100,000 and you think I'm set for retirement, you are not set. Because if you were 59 and a half and you lived until you're 86 and a half and you took an even distribution every month, assuming no gain or loss, it would be about $400 a month that you'd have to live on. Off of, so your $100,000 really equals $400 a month for the next 30 years of your life if you retire. See? Yeah, so you need to have a lot more. And there are layers of retirement. There's Social Security, there's life insurance, there's annuities, there's owning property, owning private equity personally, and retirement accounts, all these various layers of income and assets that will pour into your retirement. So you want to have a little bit of everything. So the one piece of advice I would give is definitely take a serious look at your retirement savings picture and are you on track?
Interesting. Hey, so I have a couple other questions around this savings thing. So if I put money in my self-directed IRA, if it's not deployed into some other type of an asset, it doesn't earn any money, does it?
It just earns a little pinch, but at the same time, it's also not at risk in the market. So we've seen a lot of market fluctuation and money sitting in there where it does earn a little bit of interest, it is not at risk. So there you go.
So is there a strategy that I could use with my self-directed IRA to, when it's not deployed, or maybe I don't have enough money in my IRA right now and I can't make a contribution and I don't have a rollover option to make it enough to put in an investment or an alternative like a real estate or gas and oil? Is there something else that I can deploy that money into that would make sense from a return standpoint?
Well, the answer to that is possibly. It's self-directed, so we don't sell or recommend any assets at all. So we don't offer any brokerage accounts or anything because we don't sell assets. We provide self-directed accounts. Say, for example, your IRA had a house. Well, you would want to have a cushion in there, a pad, because say, for example, an expense came up. And with real estate, it always does, right? You can't just pay for those things personally. What if your IRA owned house needs a new roof? You need to have a pad in your account to be able to cover that. Also, if a lot of these deals that are going on right now with the increasing interest rates, there are a lot of capital calls. So if you've got a capital call and your IRA has to come in with more money to the asset sponsor, that can't come out of your pocket. It has to come from the IRA. So you want it to have a pad. But if you're not ready to self-direct, you can leave it with a broker dealer. You could leave it in a Schwab, Fidelity, TD, Northwestern Mutual, whatever. You could leave it in there and have it at risk in the market and then maybe alternative assets later.
How does that go over with a capital call from a sponsor standpoint? Hey, I have a deal that's struggling, or my interest rate just went through the roof and I can't pay my bills. So now I have to call capital from my investors. How does that go over with people?
Well, you wouldn't like it. I wouldn't like it. They don't like it, but it's just a factor. Like you said, with a syndication, it's everyone's in the same boat about making this deal work. And if that's what it takes, it's what it takes. And you're still going to be asking the asset sponsor, you want to probably look at their books, make sure they're managing everything correctly and see if you agree with the capital call. If you've got an equity stake in it, you want to know more. But there you go. It's part of the deal. And I'm sure it's written into the operating agreement and the subdocs that say there's a chance of a capital call. And you'd walk in knowing that there's that risk.
Yeah, interesting. Listen, this has been great. I got a lot more questions answered. One more question, maybe two. How do I make that investment into that alternative asset? So what's the process? So let's just say that I have an account, it's funded. How do I make the investment?
It's super easy. You give us a call or you send us an email, you send us your docs. We have a document upload portal that's SOC 2 compliance. So we don't have documents in the email. But you send us your docs, you give us a call, you talk to us about what you're trying to do, and we have dedicated transaction coordinators who will work with you. And we assign them by letters of the alphabet. So like Mike with Morawski. So every time you call, whoever has a letter M will be speaking with you and helping you. So you get to pretty much talk to the same person every time. And you say, this is my deal, this is what I want to do. And they just handhold you through the whole thing. And basically we review the docs, fund the investment by check or wire, and then all the proceeds from that investment go back in the IRA.
Okay, awesome. How difficult, or is it not difficult, to do a rollover? Go ahead.
Yeah, not difficult at all. You open the account, so you've got an account number and there's a place for the money to actually go. Then you call your previous employer, their plan administrator, and say, please roll over the money into this IRA. Here's the account number, here's the address. And usually they like to do checks. So they'll send a check made payable to your IRA, and it takes maybe 2 weeks and the money will come over.
Got it. And then what's the climate like when you maybe have an IRA or some type of investment portfolio with a current traditional financial planner of some sort? You want to all of a sudden go and take a portion of that or that whole thing and put it into a self-directed, that process work, and what's that like?
Well, they get paid on assets under management, so they're not going to love it if you want to take a big chunk of your retirement account away from them because that's their paycheck, literally. I mean, they're paid on assets under management. But you're going to do with your money whatever you wish to do because it's your money. So just simply ask for a transfer. You fill out our transfer form and sign it, give it to them. Or you actually, long story short, we sign it, we send it in to them, and they'll move your money over is how it works. So you just fill out our transfer form and the money will come over. But usually the financial advisor isn't going to love it at first, but a good financial advisor wants what's in your best interest.
Yeah.
And they're going to probably have a conversation with you about your risk tolerance and what are you investing in. And they may try to talk you out of it, but it's entirely up to you. These IRAs are self-directed. You can choose to invest in the stock market. You can choose to invest in alternative assets, but every IRA is about your choice.
I remember I have a good friend who rolled some money from a traditional planner into a self-directed IRA. And he was just doing a small portion of it, not all his money. He was leaving 80% of it with his traditional planner. And the planner gave him a hard time. And I don't believe you have to treat people what's in their best interest, right? And you said it. And here's a community service announcement for you. And this planner gave him a hard time. And he said, okay, forget it. Just roll the whole thing. I mean, we really have to operate for what's best interest for our clients. Hey, I appreciate you being here today. How do people get a hold of you?
The best way is to email us info@uDirectIRA.com. So that's our website, uDirectIRA.com. Or maybe you can see the phone number above me, 866-538-3539. That's also our phone number. That's the best way. Or just go to our website, and we're always happy to help. There's always somebody to talk to you about what you need. We're well-staffed and happy to have a chat.
So a couple bonus questions I always love to ask.
Okay, let's go.
What's the best book you've ever read?
Wow. Besides the Bible?
Okay, I love that. Okay. Yeah.
No.
Besides the Bible.
I mean, as far as motivating me personally was Think and Grow Rich by Napoleon Hill. You know, about the mastermind and the power of the mastermind and about just taking action. And that was extremely motivating to me. And I read that book and I started applying it right away, and my income just really increased. That was the most dramatic change I'd ever seen.
Awesome. It's definitely a classic, that's for sure. So we all know that, and maybe people don't know, but my happy place in the world is the OC. And it's amazing to me that people are still doing business there the way the world is. Because I have a lot of friends that moved their companies from California and went to Texas or went to Nevada. But anyhow, favorite restaurant in the OC?
Wow. There's a restaurant by our office, and it's called Andre's, and they named it after their son who passed away in a surfing accident, long story short. And it's a great restaurant. It's delicious. If you're a beef eater, which I'm not, I have a lot of friends who are, and just everything's nice about it. So that's what I like, Andre's.
Andre's, have to remember that. How about best tourist attraction in the OC?
Well, it's Disneyland, isn't it? You know?
Come on, that's a pat answer like the Bible.
Happiest place in the world, right?
Yeah, right. Well, listen, thanks for being here. This has been great. I appreciate you and all you do for my clients and how you help them simplify things as much as possible for the service that you provide. Thanks. And I hope this has been educational for people. And I would just say, hey, if you are thinking about doing a passive investment, you have an IRA, you're looking for money to invest, an IRA or some qualified account could be beneficial for you. Give Kaaren and her team a call and get your questions answered and get your fund set up so that you can do some type of an alternative investment that will best suit your needs as an investor. Thanks for being here.
Thank you, Mike.
I know you'll be coming to Chicago soon, so we'll see you soon and we'll catch up.
Very good.
Thanks, Kaaren.
Thank you, Mike, and thank you for joining us for another great episode of Insider Secrets. As always, Insider Secrets is brought to you by My Core Intentions. Wherever you hang out on social media, you will find Mike and My Core Intentions. Please like and follow us to get the most up-to-date real estate investing trends. Visit mycoreintentions.com, where you can get expert coaching on all things real estate investing and property management. If you're looking to become an expert, Mike's coaching will help you scale your real estate investment business. We're looking forward to having you back again next week for more Insider Secrets.